Hey guys, Brad Niccum, Nest Mortgage Group here, back for a Monday update. I haven't done one of these in quite a while. I found out that the service that I was using was actually not sending out the email anymore and that the system failed. So I did have to go back and recreate a new list for people to receive this. And I know there's probably going to be some people that have unsubscribed from this newsletter or email. And I want to first apologize if you're getting this since you've been taken off the list. I had no way to know which ones were off and on since that system crashed. So if you do not want to receive this email, please just hit opt out. I'll take you out of it. And I apologize for giving it to you again. All right. So I'm stoked it's the month of May. Everything's really starting to heat up. When you get to May 5th, you're really excited about summer. And that's where I'm at. I love summer. I love how fast the business gets going. And I'm glad we're here. And I've seen the mortgage business really pick up. We're starting to see that spring to early summer rush. And the cool things is we're still closing loans in less than 30 days, running really right about that 20 to 25 day mark for all loan types, including VA and USDA. I'm starting to see a lot more people win with appraisal waivers again, doing that 20% down and getting that appraisal waive before the offer goes in. Sometimes we're in a competitive situation and that just helps solidify the deal and win it. If you've heard, they've announced that student loan collections are going to kick in soon. So that's something our borrowers need to be thinking about and how those new payments are going to kick into their debt to income ratio. Or if they have defaulted school loans and they start to go into collections, those garnishments could be quite a bit on their paycheck and take somebody that is today qualified for a loan that may not be qualified in the future. So it's something to talk to the buyers about. It's something that I will be reaching out to them about as well. If a student loan is in deferral, FHA, VA, USDA, and Freddie Mac, we only have to use 0.5% of the balance as a payment. If it is a conventional Fannie Mae deal, we do have to use 1 full percent. If you have a client that is in default on their student loans and they just don't know what to do, have them reach out to me. I've helped a lot of clients work with the student loan administration to get those put on what's called the Quick Start program and pull them out of default and get a payment arrangement set up so they can purchase a home. Another thing I wanted to touch on real quick, I know we all talk about not buying a new car, not quitting your job, not getting your credit report pulled. Don't open a new credit report. Don't buy anything that you finance, and don't do any 90 days same as cash. Another thing that is starting to become a little bit of an issue are these programs where you're buying things online and you can turn that into 4 payments or 6 payments. Those Affirm is one of them. What that does is it may not make a customer fall out of qualification for a home, but it does create a lot of additional documentation that the customer has to get us. When we see those on the bank statement, that those payments are going to be showing up, that they're making them, the underwriter is then going to ask for that payment arrangement to make sure that it isn't more than 6 to 10 payments, to make sure that it doesn't go into their debt to income ratio. And it just causes the client a little more challenges of getting more documentation. And those do show up through the process. So keep in mind, we do have to repull credit, what's called a refresh report before closing. And that's where we see if someone got their credit report or bought something new. Fortunately, those Affirm payments don't show up on there, but they do show up on their bank statements. And that's where, we have to get that additional information. So just another thing to talk to our clients about. Rates are what they are. Hopefully we start to see them ease a bit. It's been a little crazy. The market's been so volatile that they've, gone back and forth and whiplashed a little bit. Hopefully that gets settled down and we start to see some positive movement in interest rates. If you've got a buyer that needs to get pre-approved, evenings, weekends, holidays, I don't care when it is, I'll give them a call. And don't ever hesitate to reach out and say, this buyer needs called. You can always text me their phone number. I'll call them right away and we'll see if we can get them pre-approved. Pre-approvals take about an hour or less unless the client is self-employed. If they're self-employed, I do need some tax returns to work them through that process. And remember, if we do have a customer working together and they're putting down 20%, let's make sure that we don't have an appraisal waiver on that house before you write the offer. We can be a little bit more competitive when we can put on the purchase agreement, no appraisal needed. I do put that right on the pre-approval letter as well, letting them know that they are pre-approved. So thanks for tuning in the video. Again, I apologize if if you asked to be taken out of this list and you got put in, I'll make sure that happens. And have a great Cinco de Mayo. And remember, in case you don't know, Cinco de Mayo is not Mexican's Independence Day. It commemorates the Mexican Army's victory over the Second French Empire at the Battle of Puebla on May 5th in 1862. It is far more celebrated in America than Mexico. But head out to your Mexican restaurant, support them all, have a glass of tequila and a nice burrito, and have an absolutely great day.